And it's time to do another journey, 55 minutes journey around the world of business. It only happens here at Business Incorporated. And here's what we have prepared for you on the program. We're going to dig deeper into that withholding tax, which it begins early this month after the assent of the president to the executive order. And in Kenya, it's more taxes. This time, it applies to palm oil, and manufacturers are groaning. Ethiopia is asking for assistance both from the World Bank and the IMF. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. Yes, we begin from the global space. As usual, oil prices fell in early trade on Thursday after U.S. employment and business activity data came in weaker than expected, in signs that the economy may be cooling in the world's top oil-consuming nation. Brent crude futures went down 30 cents, 0.34%, at $87.04 a barrel, while WTI fell also 32 cents at 0.38% at $83.56. And I must say, it has improved earlier today. It went down even worse than that. So with activity themed by the U.S. 4th of July holiday, it's, well, happy independence to the United States at this time. In the U.S. Yesterday, the data that came out showed for the first time applications for U.S. unemployment benefits increased last week, while the number of people on jobless rolls rose further to a 2.5-year high. And that those are some of the factors driving oil prices. Separately, the ADP employment report showed that private payrolls increased by 150,000 jobs in June, below a consensus predicting an increase of 160,000, and after rising by 157,000 in May. Well, still in the global space, gold prices drifted high on Thursday after softer than expected U.S. economic data fueled hopes that the Federal Reserve could cut interest rate as soon as September. Spot gold went up 0.3%, $2,362.10 an ounce, after hitting a near two-week high in the previous session. U.S. gold futures was a little change, $2,369.80. U.S. economic data we told you about came out yesterday, shows weak services and employment report, means a slowing economy. And a separate report also show initial applications for U.S. unemployment benefits last week. Traders are now looking for U.S. non-farm payrolls. That's due tomorrow. And of course, that's going to give further direction. In other metals now, spot silver rose 0.2% to $30.54. Platinum added 0.5%, $1,002.28. Palladium was on the flip side. However, it dropped 0.6% to $1,023.23 an ounce, and after climbing to its highest level since mid-April in the previous session. Now we come to Nigeria and see what's happening right there. It's Nupeng. After a lot of controversy around their leadership, finally there was a court judgment that now allows them to take on new leadership of PETR, and they had that election with a new chairman leading that arm of the oil and gas sector. And now that they're settled, the national presidents say they're more focused on national issues.
As a union, we are still engaging Dangote to ensure that we are part of the process. You know, Dangote is just starting; they just started operation, and discussions and engagements are on to ensure that Nupeng, is also part of the distributive process. It's just unfortunate that again, government has continued to shift, the opening of those refineries. The last time we were informed that the Port Harcourt refinery was ready and was going to be reopened, but again they came to also shift the dates. So far, we have been told that before the end of this July, they will come on stream. So we are all hopeful. Well, government knows that the roads are bad at this point, and these are rainy season. Without good roads, tanker drivers can, move their products across. So we also use the opportunity, to also inform government that most of these roads should be given some palliative measures, so that the drivers too can also move freely and distribute the products.
And a conversation that was held earlier today with between Ladi Williams and the Special Assistant to the President on investment. And from that, we can tell you that data from the National Bureau of Statistics show that capital importation rose by over 200%. Those figures came out earlier this week. Meanwhile, the data shows a worrying trend that foreign portfolio investment accounted for a huge chunk of that, and experts say that foreign direct investment should be higher as FPI shows are more temporary. And according to him, that's a special assistant to the president on trade investment and in trade industry and investment, who was a guest on Business Morning. The president, Tinubu's administration is moving to promote ease of doing business to get more FDIs in.
So, I mean, we have to understand that the challenges that we are facing compounded over time. And I think we need to get away from the mindset of low-hanging fruit, immediate gains, and start thinking more of the medium to long-term approach so that we can begin to do the enduring and prepare ourselves for the road to productivity and manage the strategic evolution that we need to get our economy where it needs to get to. This is not saying that the government is not mindful of the immediate issues that every citizen is facing, because as an economist said, in the long run, we are all dead. So these issues are very near and present, are very pressing. And that's why the administration, the palliative measures of the administration in being able to address the very present issues that particularly vulnerable communities are facing in terms of providing cash transfers to our most vulnerable citizens, and also by on the supply side and the industrialists by providing concessional financing to below 10% to industrialists, so that cost of capital will be lower for people who need to make investments or people who are driving businesses. So the government is mindful of the present challenges that people are facing, but at the same time, government has to put in interventions that are sustainable and enduring, and they don't happen overnight.
Yes, because FPI obviously is hot money, and even now there's news that some of that have already started leaving the country. I guess we'll see that in the NGX. I mean, we're not having that accelerated growth that we had end of last year and beginning of the year. But now let's go to another issue. It's supposed to be good news. You know, that simplified tax regime that has gotten the approval of the executive, a proposal, one of the reforms proposed by the Taiwo Idele committee. So we're going to see how that could work, talking about withholding tax. Celebrating that small businesses, I think, with transactions lower than 2 million naira are exempted from that. But how does it work? Because we hear that it's going to be reduced from source, so it's going to be deducted from source. Let's talk to tax experts to help us, because some of these tax issues could be really confusing and scary. We have in the studio Mr. Vincent Okokuni. He is the Senior Manager Commercial Practice at Anderson, Nigeria. Obviously a tax expert that we can speak to at this time. Good afternoon, and thank you so much for your time.
Good afternoon, good to be here.
Yes, so it's supposed to be a new tax regime, but help us to understand first. So the committee proposed, made one of these reforms proposal as an executive order, got the approval of the president. Now we see a letter from the Minister of Finance. So help us to understand the process before it comes to a level where it is being implemented.
Okay, thanks very much. So just to give a big background of withholding tax. Withholding tax is not a new concept. The idea is to, raise funds for the government, basically, to say that when there are transactions that are known as qualifying transactions for withholding tax, there should be a deduction at source, and then when that deduction is made, you remit to the government on behalf of the service provider, and then when the service provider is required to file his tax returns, that amount that has been deducted and remitted on his behalf, he can then use as credits, against his income tax payable. This whole new regulation is one of the proposals that have been, put forward by the Presidential Committee on Tax and Fiscal Reforms, and the overall objective is, to try and simplify the process of deduction at source, for withholding tax especially. And also, if you look at the regulation, I think there's also an objective of, trying to expand the tax net by, bringing in businesses that before now were not registered and therefore do not have, a tax identification number. So if you look at all of the processes, yes, we've seen that letter, the regulation issued by the Minister of Finance and the coordinating Minister of the Economy. I think the overall objective is to, try to simplify where necessary, because some of the rates have been, amended, some have been increased, and some have been reduced. But I think overall, it will be interesting to see how it plays in the coming days. But I think beyond simplifying the process, a key objective that that this could achieve would then be bringing more taxpayers, into businesses into the tax net.
So how does this implementation start? Where does it come from in practical terms? So our viewers watching can say this is how it's going to affect me, or this is going to affect my income or my purchases.
Okay, so if you look at the regulation, it has a commencement date of 1st July 2024, which I think could be a challenge because, today is 4th July already. And then if you look at the commencement date of 1st July, the expectation is that businesses would have to implement immediately. But that may not be very smooth if you look at the need for businesses to review their processes and to update their protocols and ERPs in order to incorporate some of the changes that have been introduced by this regulation. For example, a very common example is contract of service, where you make supplies under a contractual arrangement, and then you are required to deduct withholding tax at 5%, for instance, right? And then now the regulation has amended the rates. It's now reduced to 2%. So imagine a case where a business has made a deduction at 2% in compliance with the regulation, but then perhaps when the official gazette is introduced, there may be some thoughts to say, okay, maybe a commencement date of 1st July would not be so realistic. If there's a difference in commencement dates in the official gazette, for example, that could create a problem, for businesses that might have gone ahead to implement based on this need date. So I would imagine that some thought is given to that, in terms of.
So you think there's a need for an adjustment to that commencement date?
Yeah, I think so, because the regulation came out same day, 1st July, when it was supposed to be effective, and I don't think that will have given businesses, sufficient time to, review their processes and update their systems, to incorporate those changes, especially when it comes to categorization of service providers and adjustment in rates for withholding tax deduction.
So when I read through the letter from the Minister of Finance, and it seems there's still processes to be put in place before we begin the proper implementation, just as you have noted, before it even gets to where businesses have to readjust and rearrange their systems and payment system and all of that.
Yeah, again, withholding tax is not an entirely new process, right? It's always been in place where, as a service provider, I provide services to a customer, and the customer is required to deduct and remit. So as a business, I'm looking at it both as a service provider, where customers are required to deduct from my invoice when they pay me, and also as a customer, when I am also required to deduct from payments I'm making to my service providers. So all of these processes have to be in place. There's also the exemption, if you will, for small companies who earn less than 25 million turnover in a calendar year. That also has to go into my system to be able to properly capture that category of businesses, to ensure that we don't deduct when they provide services to you as a business.
So, this administration has said it is big on ease of doing business. What does this say about the ease of doing business?
Okay, so, yes, like you mentioned, one of the objectives, has been to, overhaul the tax administration system in Nigeria, and to, try to make compliance easier for businesses. And for me, I always hammer on, voluntary compliance, because if as a regulator I have to chase businesses to, to comply with their tax obligations, you need to look at the resources I'm going to be expending, in trying to get them to comply versus
because
where
I think a couple of weeks ago we did see the cost of tax collection that has also increased in the country.
Exactly. So I think in overall, if you look at the regulations, there are clear provisions that exempt, for example, small companies. There are also instances where where services are provided by companies and it doesn't exceed 2 million naira in a month. Such transactions should also not be liable to withholding tax. And for the insurance industry especially, there used to be this very big problem where brokers deduct their commissions up front, and then in the event of tax audits or reviews by the tax authority, FIS especially, it then becomes a problem asking businesses, insurance companies to account for withholding tax on the commissions that the brokers deducted up front. But that has also been taken care of to say that where brokers deduct commission up front, in line with the peculiarity of that industry, then such transactions would also not be liable to withholding tax because it's peculiar to the insurance sector. So that has been taken care of with these new regulations. So I think there's a balance in terms of addressing specific challenges of different industries and also protecting SMEs. And also beneath there's also this implicit objective of expanding the tax net. So for example, one of the striking changes, right, is the requirement that where businesses do not have a TIN, for example, and then you provide a service, when the customer is paying you, the customer is supposed to deduct, from your payment and then, remit the withholding tax on your behalf. But in an instance where the service provider does not have a TIN, what the regulation has said is that the customer should deduct twice the amount they will have, deducted. So if I provide a service that is worth 100 naira, for example, and the withholding tax is supposed to be 5% ordinarily, so what you should ordinarily do as a customer is to pay me 95 and then deduct 5 and remit to the government on my behalf. But where I do not have a TIN as a service provider, what the regulation is saying is that you should deduct twice the amount, meaning 10, and then I only get 90 cash. So I think what that could do is to force businesses to regularize their affairs and make sure that they register with the tax authorities that's applicable. And if you're able to achieve that, that could also expand the tax net and potentially more revenue for the government.
It sounds to me like this is more job for tax consultants like yourself, because how many Nigerians will be knowledgeable enough to know? I mean, even in the United States, people have to employ the services of tax consultants to handle their tax, withholding, deductions, and all of that. And it sounds, like something that you would need an expert to help you manage this if you were even to benefit from the new reform.
Yeah, typically where you have changes in legislation and tax laws, it's advisable to talk to an expert.
That their services are expensive.
Well,
so you're trying to save some money, but you're also spending money.
But you see, you also need to look at the value. If you do not consult a professional, and then you may have to pay for for your ignorance, and paying for ignorance may be far more costly compared to paying a professional to ensure that you comply and you are not found wanting as far as complying with the law is concerned.
The cost of ignorance is always more. Thank you so much for your time, Mr. Okoni. Mr. Vincent Okoni, thank you so much. Senior Manager, Commercial Practice, Anderson, Nigeria. Thank you. We hope to discuss more about this tax and help more Nigerians to understand how they fit
Anytime. It's a pleasure to be here. I'll be available when next you call on me.
Thank you so much.
Thank you very much.
All right, let's take a break. When we come back, we'll head to the markets. Please stay with us. Welcome back to Watching Business Incorporated on Channels TV. And we're heading to the markets now with Will Ibong. Will? Good afternoon.
The markets were looking bright and green this afternoon, but I just hope that it sustains because, intraday activities doesn't really tell the direction of the market sometimes, even if we think that's where it's going. But we're going to see how market plays out for other major equities very quickly. Now, let's look at that. For major equities, we see sentiments at intraday were positive. Nigeria's NGX was in the green. slightly up by 0.08%. They are still climbing, hoping that that 100K level sustain. And this was lifted by gains in the oil and gas sector. Corn oil share price added 10 naira at intraday. O&O was not doing badly as well. Let's look at South Africa's JSE. It was up 0.71%, climbing higher to 81,000. That index is not doing so bad there. Now, elsewhere, Egypt's EGX30 traded up 0.65%, hanging on to 28,000. And we look at Kenya's stock markets. The performance for yesterday, we see closed Wednesday trading session down 0.23%. Now let's get the facts behind the intraday figures at the NGX, and we're going to be talking to Vincent Oshoma, securities dealer, Midpoint Capital Limited. Good afternoon, Vincent. Good to have you on the program. Vincent, what stocks are investors trading or fading that are driving activities at the NGX? But before you start, I know that corn oil, O&O were flying high at intraday. Are other stocks driving the sentiments now?
Good afternoon. The other stocks that are actually driving sentiment in the market now are the banking stocks. Like you rightly mentioned, the oil and gas sector, especially for Wando and corn oil. For Wando, the news about the approval for the acquisition of Nigerian hydro oil operations, I think that's the major driver currently on full beat. A lot of investors are going for that stock. Then for the banking sector, we have seen interest in the stocks and banks, especially for tier 1 banks, talking about UBA, Access, Zenith, and GT. I think it has to do with the right issues that are currently seen in the market. Some of them have started, Fidelity Bank has already started its own right issue. I'm expecting Access Bank. I think this what is driving the investors' interest, coupled with the fact that we are actually approaching the ending season, which is releasing their results by the end of this month.
Okay, speaking of the rights issue and public offers that we've seen, Access Holdings, you mentioned, is set to raise 351 billion naira through rights issue to existing shareholders starting Monday, July the 8th. And this is to strengthen its capital base and facilitate growth. The company held a formal signing ceremony to that effect. It's all about the raise to recapitalize. Vincent, given the 24-month time frame, do you see any of these banks not meeting the mark?
Yeah, for the tier 1 banks, there is no issue for them at all. They're definitely going to meet the deadline, and they have already started taking the lead. Looking at a lot of them have announced their plans in the market, and they're expecting them to start very soon. Access is starting, Fidelity have already started, we expect UBA and others to also follow suit. But I think for some of the banks, there may be challenges. I think for the mid-tier banks, they may start thinking about measures, because some of them may also consider reevaluating their license. You know, the good thing about this recapitalization is that you have different tiers for different banks. I think some of them will consider that option. And also for the new entrants into the market, they may also be looking at measures. So we hope to see within this time, I don't see any bank being unable to meet it, but we'll be seeing a lot, which I expect to see a lot of measures and in the market, and likely acquisition to help banks meet this new recapitalization.
Okay, we've seen the offered prices. Fidelity Bank came in with the offer at 9.75 naira. Access Bank is over 19 naira. What has been the acceptance level from investors vis-a-vis the offered prices for the rights issue so far?
Yeah, I think there will be a lot of acceptance depending on the banks. Like for Access Bank, if you look at the rights price of 1975, and when you compare it with a 52 weeks high of over 30 naira, that's more than 50% upside. I think the investors will be looking at that, and also looking at what the company has done in the recent past in terms of extending its operation across Africa. I expect to see that affecting its financial report going forward. So I think investors will be considering this in looking at bank. And Africa Bank has been and posted good results over the years. For 2023, in terms of gross earnings, they were number 1. And I think in going for that stock, I think investors, because it's going to be a right issue. So I think the investors, current shareholders, will also be considering those facts in taking up their rights. And for those that want to trade their rights, I think they will also be able to do a good business with that, because of a lot of persons will be interested in the stock.
So before the market closes today, I just want you to give me in 30 seconds, is it going to be green? Is it going to be red? Just one word.
Currently, after your report, currently the market is red. I think it has to do with the activities in the telecom sector. MTN is currently trading downwards despite the gains we have seen in some of the banking stock and the oil and gas sector. I think that's a major impact on the market.
Okay, so you see the market closing in the green or in the red? Watch out for that. Thank you so much, Vincent Oshomer, securities dealer, Midpoint Capital Limited, for your thoughts on Business Incorporated.
Thanks for having me.
So we'll look at other major stocks now in the Gulf region. Middle East, they were mixed at intraday. Abu Dhabi was down 0.29%. We see Dubai also trading down 0.39%. This was dragged down by losses in industry, utilities, and communications stocks. Now, still within the region, we see Saudi Arabia trading up at intraday 0.10%, and Qatar index 0.14%. And this is gaining for a fifth straight session, supported by a 1.9% increase in industries, Qatar, and a 0.5% rise in Qatar gas transport. Let's look at Asia now, how they closed trading today. They mostly rose as Japan's major index benchmark hit an all-time high. The Nikkei 225 rose 0.82% to close at 40,913 points, and this is surpassing all the all-time highs that are set in March this year. Now, Japanese companies have delivered the largest wage hikes in 3 decades this year, according to the nation's biggest labor union. Now, South Korea, let's look at that market. It rose 1.1% to end the trading day. Hong Kong's Hang Seng Index also was up 0.21% in its final hour of trade. Mainland China's Hang Seng Index, mainland China was down 0.83% to close at 2,957 points. And we see Australia's S&P ASX up 1.19%. Now, markets in the U.S. are closed today for the July the 4th holiday. That's Independence Day. But we're seeing that they're going to be resuming normal markets tomorrow. But meanwhile, we're seeing Federal Reserve officials at the June meeting yesterday indicating that inflation is moving in the right direction, but not quickly enough for them to lower interest rates. That's a bummer for investors who have been watching out for rate cuts. Now, minutes released Wednesday showed that the policymakers lacked the confidence they needed to lower the policy, while they generally agreed that there should be no rush to cut. There's no rush to cut in the U.S. There's no rush to cut.
Investors are in a rush, always in a rush.
They need the money.
Yes,
they need the money. So right now it's going to be dumping.
Taking their time, but investors will not agree. Let's start now.
Let's start something.
And I think we saw those payroll data out.
It was quite soft.
Giving hope that perhaps there'll be that September cut.
True.
But Jerome Powell is so reluctant to.
No, he's very cautious at the moment.
All right, well, thank you so much. All right, now let's move to the UK with Juliana, our correspondent right there. Juliana, we know it's a very busy time for you over there in the United Kingdom. Busy time for economic data also. UK construction activity, we see, went up. We also have data from car sales, and the economy is still top on conversations in the midst of all of this.
Absolutely. Good afternoon, Innie. Of course, it's election day in the UK, so it's pretty quiet, surprisingly. We've had 6 weeks of constant news, and today we're just all waiting until 10 o'clock when we get the exit polls showing us, what exactly has happened. But that hasn't stopped a slew of economic data coming out, particularly, as you quite rightly said, the S&P data, which has a kind of forensic look at manufacturing, construction and services. I think today the major focus has been on manufacturing, which, to be honest, has had a pretty decent running over the past sort of 12 months or so. Of course, due to lockdown, we really suffered in terms of getting up some of those order numbers. But there had been an uptick. There had been an uptick, as I said, for the past year. But according to the data that I've just had a look at, it seems to have dipped. There's been a dip between May and June. May, the index recorded a 51.2. Of course, our viewers will know that 50 is kind of a benchmark for growth. So any PMI data that comes in above 50 shows that the sector is expanding. Below that, of course, it's contracting. Now, in June, manufacturing numbers have come in at 50.9. So there is still growth, but certainly the growth is declining slightly. Now, there are many reasons for this. Mostly it's because of what's happening in the Middle East. And I know that the news dial's changed, but there is still war. And the Houthi rebels are still attacking ships across that strait. That is affecting manufacturing and numbers. That's been cited. There is a spot of goodness, which is why it hasn't dipped below 50, and that's because of domestic orders. The economy, as you said, still a key battleground in this country, but we have managed to slowly limp our way out of a recession. I think that's been reflected in this data, because alongside the actual numbers, S&P have also conducted a survey from the top manufacturers in this country, and they are all mostly saying that domestic interest is on the rise. So domestic production is where manufacturing is at its heart. Exports are weak. We know that. We've discussed this extensively. Mostly that's to do with Brexit and the fact that we haven't been able to successfully forge relationships further afield, although, of course, we have been working on that. They haven't exactly gone as planned. So the overall picture is that UK manufacturing is doing well, but there is some slight concern about that dip month on month. But alas, we'll have to wait and see what the July figures hold.
Yeah, we'll certainly have to wait and see. But we don't have to wait for the market numbers. We could know investor sentiments at intraday.
That's absolutely right. So we know that, of course, the UK is heading into election. Quite interestingly, actually, even though the markets, I think, have pretty much priced in what is expected to happen, because I think the polls have been very, very consistent over the past 6 weeks. So there is no kind of surprise in the markets. I suppose the only surprising thing is that since Prime Minister Rishi Sunak called for a general election, I think that was on the 22nd of May, the FTSE has actually dipped 2.5%. That's the UK blue chip index, which is quite worrying. I suppose only in Paris it's fared worse, the SAC, because of the possible emergence of the far right. But in the UK, yes, the UK blue chip index has dipped since the start of the election, but today it's doing quite well. Of course, in America, it's closed the markets because of the holiday. I know the Japanese yen, they've picked up on the UK general election. To be honest, most countries around the world, their markets are going to be affected by the outcome, despite the fact that we have been living through a very difficult cost of living. Britain is still a G7 economy. It is one of the wealthiest countries in the world. What happens here will have global ramifications. Also in Nigeria too. So we're going to be keeping a close eye on the result. And of course, as you've quite rightly said, tomorrow, Friday, Channel's Business Global is going to be a UK election special. Do tune into that. Let's have a look at those numbers then. The all share is up at intraday, up by 0.60%. The FTSE 100 up by 0.69%. And the FTSE 250, the domestic market INI, that's up by 0.19% at intraday. In the currencies market, the British pound currently trading up against the US dollar, up by 0.08%. Also up against the euro by 0.03%, though down against the Japanese yen at intraday by 0.25% INI.
All right, Julian, I will certainly be looking out at that Business Global. I know that you have a jam-packed reactions and results from the election. We're looking forward to it.
It's going to be exciting.
All right, thank you so much. So now let's go to the EU, and it's still elections because it's the week in between elections in France, and with the right wing, the National Rally Party, leading into the runoffs. Other countries in Europe are contemplating the outcome. Let's hear what Lars has observed around him. Joins us from Berlin. Hi, Lars. Good afternoon.
Thanks for having me, Ini. Well, there's a whole lot of reasons, including the fact that the French have always been leaders in the European Union, and the nationalist government would most certainly change course there and likely weaken the alliance of the 27-member bloc. But as of yesterday, there's another problem that worries many in Germany. Right-wing party leader Jordan Bardella has given an interview, and that was back in mid-June, by the way, but it was only just noticed here. And he said that he would like to take France out of the European power market. He says, and I quote from the interview, he wants to go to the European Commission to negotiate an exemption from the European electricity market to get out of price-setting rules and allow France to go back to a French electricity price. Now, what does that mean? France would set its own energy policy and set its own electricity prices too, which could make power cheaper for the French. That is, of course, because France uses a lot of nuclear energy, which is relatively cheap, as opposed to Germany, for example, where energy prices are much higher since the country got out of nuclear energy and decided to rely on coal and gas again, of course, in addition to renewables. Now, if the French need more electricity than is available, or if they have a surplus and they plan to sell energy, they would do so based on bilateral trade deals that would yet have to be negotiated.
So why would this be a problem for Germany?
Well, because electricity would become a lot more expensive here. France, with its nuclear power plants, has been selling electricity to Germany at very low prices, partially because the country's plants are old. They have long been written off, and thus they are simply producing cheaper. Now, without deliveries from France, customers here would have to pay more. However, there are enough other suppliers to at least secure energy supply for Germany, because we're also buying from Switzerland, Belgium, Denmark, Norway, and the Czech Republic, just to name the largest suppliers. Now, one problem, of course, is where electricity is needed and where it's delivered from. There are parts of the German southwest that do depend on French energy. Supplies imported from the north can't really be transmitted there for lack of power lines. So we might have to produce yet more electricity from coal and gas, and that, of course, has an environmental price too. Now, fortunately, this whole scenario does seem kind of unlikely to actually be happening. There are long-term contracts France cannot easily get out of, and the question is whether Bardella is saying some of these things only to make headlines and win votes from the anti-EU constituents.
All right, when it comes to electricity, always a lot of faces to it. But let's look at investors and how they're doing this time.
Well, there's another election today in the UK where Brits are deciding on a new prime minister. It is widely expected that the Labour Party will win by a landslide and that Keir Starmer will be the next PM following Rishi Sunak. It would spell the end of a 14-year reign by the Conservative Party, and those 14 years have been pretty disastrous for the country, starting, of course, with Brexit. Leaving the EU has been terrible for the country, especially in terms of trade. There's also been a dramatic rise in poverty in the UK, with millions of Brits depending on food banks. The healthcare system is in crisis, productivity is down. So Labour has its work cut out, and today's election is likely to give them a very strong mandate.
All right, Lars, thank you so much for that. Elections everywhere. Now, we'll go ahead with the program that's Business Incorporated on our UK platform as well as our domestic platform. But for our DSTV viewers, we'll be taking you to Abuja now. We're handing you over to Kwaita Yobu Road in Kwali, area council of the Federal Capital Territory of Nigeria. And what's happening there is the reconstruction of the Kwaita Yobu Road. Right there. So hand you to Abuja while we go ahead with the program. And continue with the program now. We are talking chicken, and I know a lot of people like this. It's white meat, it's healthy, but we've seen the price surge, as with other things. A major source of protein, and many dishes in the Nigerian home actually have this. We've seen price climb about 22%. A kilo of drumsticks now selling for about 5,500. And this has led to a shift towards alternative meat sources. Fish, pork, How popular are they in your home? Let's discuss this now and find out perhaps what the financial derivatives company has gathered. And joining us to discuss this now. Hi, good afternoon, and thank you so much for joining us, Tomiwa, at this time. Tell us how much change this hike in price of chicken has done to the consumption pattern in homes in Nigeria.
Yeah, so, just like a lot of things that are going up now, the price of chicken also has corrected. Just in 2024 alone, about 22%. And, protein is very important in every meal in Nigeria. And, one of the reasons why we're seeing this rise in prices because, the poultry industry in Nigeria recently has been struggled with a lot of challenges. Every 2 or 3 months, the Poultry Association of Nigeria comes out statistics that says about 30% or sometimes even 50% of poultry farms in Nigeria have shut down. And the reason why this is happening is because, the cost of feeds have skyrocketed. Also, maize is an integral part of the feed of chicken. And, due to the insecurity in the northern region, exchange rate depreciation that is increasing import costs, the price of maize have skyrocketed. And a lot of farmers are not able to, unable to afford feed to keep their farms operating. So, we're seeing a price really increasing of chicken really increasing. And when it comes to the, cost elasticity demand, there are a lot of other sources of protein, other sources of meat that are rich in protein like chicken, but traditionally are not popular. But now that Nigerians are becoming more price sensitive, we're seeing this switch. And not just even consumers, even farmers are moving from rearing chicken to now rearing rabbits and pig because, rabbits are actually more less costly to run because their feed is not specific like chicken. They eat a lot of varieties, so it's less costlier, and with the increasing demand, producers are also producing more are rearing more rabbits, rearing more pork. So we're seeing that shift. But the only issue now is that as there is more demand for this product, the prices of this product are also increasing. Pork itself is becoming more expensive. So we're just seeing where scarcity is leading to more inflation and where food prices are just generally increasing.
Yeah, and seeing more people shift to the production, would also look at the raw materials needed for the feed, especially we talked about telemaize here on the program on Business Morning yesterday. Tell us the impact that the feed, is having on this demand and the price, as well as the deficit, or it seems, of supply.
Yes, so the feed is quite important. How are the chickens supposed to grow if they are not able to find and are not able to get the nutrition they needed to grow? The chickens are also facing their own food inflation more or less. So, that's why it's affecting supply. And the reason, again, as I mentioned, is because, the prices, most of the ingredients used in the feed are maize, sodium, soya. And when you look at the prices, you look at the trend data, the data trend of the prices increase. They also surged a lot, as again I said, insecurity in the northern region, just like how rice is increasing for human food, our food that we consume, that is the same. Maize, which is an important aspect of their feed, is increasing a lot. And again, when we look at the level of farming that is done in Nigeria, a lot of farmers practice subsistence farming. They practice more or less the extensive and the semi-extensive type of farming where there is free range. And a lot of these people, they don't, in extensive, literally most times they don't even pay attention to what the chickens are eating. So these type of systems, they don't allow for higher productivity. And when subsistence again is just mainly for household consumption. So those are some of the issues that are causing a lower supply. And of course, when there's lower supply, the price increases.
All right, Tomiwa, thank you so much for that. Tomiwa Ajewole, analyst with Financial Derivatives Company. Thank you for your views.
Thank you.
We move to Kenya, where tax is still the theme of conversations. Manufacturers of edible oils face higher costs for importing crude oil after Kenya and Uganda increased the duty by 10%. In this year's review of common external tariffs, the two East African countries agreed to raise the duty from 0% to 10%. And Kenya is championing local production of edible oil, pushing for the cultivation of sunflower and palm oil to cost reliance on import. And we're still staying in Kenya, but away from oil now. A total of 2 million prepaid meters have been updated in the last 3 weeks since the rollout of the Update Token Meter Yako campaign by Kenya Power. This is about 30% of the target. The target is 7.4 million prepaid meters that need to be updated. The campaign is part of an ongoing global exercise that targets all prepaid meters that use a standard transfer specification, which is a universal method to transfer tokens to prepaid meters that ensures the security of generated tokens. From Kenya, we go to Egypt, where farm equipment market there is projected to grow at a compound annual growth rate of 4.18% over the forecast period, increasing from 1,554 million, 155 million in 2022 to more than 200 million in 2029. The Egypt farm equipment market is on the brink of significant expansion in the upcoming years, driven by the mounting pressure on food due to country's rapidly growing population. And to address this escalating demand, farmers must ramp up their production to be able to match up. And we go to Ethiopia, where that country is negotiating with the International Monetary Fund and World Bank for $10.5 billion in financial assistance. This is according to the Prime Minister, Abiy Ahmed. He cited the figure during an address at Parliament. Negotiations with IMF and World Bank are taking a long time. According to him, they have their own terms, and he says that they are not easy to deal. And we do know what's going on in Kenya now, following meeting up with the requirement to access financial assistance. We hope this does not become the picture also in Ethiopia. And still discussing IMF now, the Executive Board of the International Monetary Fund has completed its 6th reviews on the Cameroon's Extended Credit Facility and the Extended Fund Facility Arrangement. The completion of this EFF reviews allows for an immediate disbursement of SDR about 55.2 million. That's worth $72.7 million, bringing total disbursement on their rearrangement to SDR 483 million, worth about $644.6 million. The Executive Board also completed the first review under the Resilience and Sustainability Facility Arrangement. Completion of this review makes available 34.5 million SDR. Let's head to the crypto space now with Laddie Williams. Laddie, good afternoon.
Yeah, good afternoon, Ine. So big drop again today from yesterday, big 4%, another 4% drop. So we're seeing big whale movement in the crypto market.
How do we know when we've hit rock bottom?
That's the problem. Nobody knows at this point, but Bitcoin does whatever it wants, technically. All right, let's look at what's happening with Web3. At this point, we see Certic as an industry leader when it comes to analytics. We see they have a report there showing total losses for Web3 in the first half of 2024. We see that $1.19 billion. So those that were playing in that market lost that amount for the first half. Second quarter, $688 million as was lost in the second quarter. Then for private key compromises, $170 million, and that was lost. Then Ethereum chain losses, $170 million. A lot of money we see lost there. Let's bring in Adebayo Jonas, co-founder ICP.hub, Sahara, joining me via Zoom. Great to have you on the show.
Great to be here. Thank you for having me here.
Hello, Adebayo. I think you have to unmute. I see your mouth moving, but I can't hear you.
Oh. Can you hear me now?
All right, so yeah, we've been looking at the losses there with Web3, crypto, and we see that data from Certic, Adebayo. So talk to me about how you're seeing security in Web3 so far in the first half of 2024.
Yeah, so just assuming you can hear me, confirming you can hear me, right?
Adebayo.
Yes, I can hear you. I'm confirming if you can hear me.
I can hear you. Fantastic. You talk, yeah.
Okay, great. So, with the ongoing incidents in the crypto industry, so we are welcoming a lot of newbies into the system who are less educated about how to secure their private keys, how to ensure that the transactions they are doing on the chain are secured, which is, of course, leading to multiple losses in the blockchain and the crypto ecosystem. So majority of them, they are due to the phishing attacks. Of course, everybody is going digital. But then how do you protect your digital assets? How do you protect your online privacy and all? Majority of these people have no idea on how to do that. So most of the phishing attacks, the inadequacy to protect their private keys, and knowing precisely which website to click, which link to click, how to protect their, their digital assets is a major concern. And of course, most people also use platforms that are not trusted. So they transfer their valuables on these platforms and eventually lead to total losses of those assets. So, but one thing that makes, despite all these losses, they are fully traceable. So they can see their asset being moved from one wallet to the other, which can be said for the traditional banking or the banking ecosystem. So this is quite different. But people just need to know precisely how to protect their assets in terms of securing their private keys, in terms of knowing which link to click, in terms of knowing how to store and not overstore their private keys in the sense that they can tend to lose it forever, which of course leads to the total loss of their assets. So private key compromises is one major issue. And of course, also looking at the security of the smart contract being deployed for majority of these applications. And smart contracts, of course, as we know, it are self-executable. But the majority of these codes, which are done by human, leaves behind bugs, some ways for attackers to attack, and then eventually leading to losses of digital assets. Right. So security of these platforms is also quite important. And of course, the platform now being used for majority of these applications is also quite important in terms of security measures.
All right, in just 30 seconds before I let you go, what's the safest blockchain out there right now?
Oh, believe me, I'm working for them. That is the Internet Computer Protocol, which of course have been able to deploy several measures to measure up to the requirements of the day-to-day needs for new days and of course the future applications we can ever think of deploying using the canisters system and among some other major deployments in the industry. The Internet Computer Protocol it is.
Internet Computer. Thank you so much. It was great having your perspective. Adedayo Adebajo, co-founder ICP Hub Sahara. Thank you. All right, so Ini, there you have it. Playing in this crypto market, not easy, but we see Kiyosaki predicting $10 million Bitcoin.
Which year? What decade?
Only God knows.
Laddie, we're still waiting for all the predictions.
We've not seen 100,000.
Halving, yeah.
Not seen 400,000.
We're waiting for this, and then we're heading to 10 million
already.
Shiba Inu is also...
high burn rate for Shiba Inu. We know the devs keep burning most of those Shiba Inu tokens, so they're trying to compress the circulating supply, and somehow that increases the value. Yeah. But no price movement there for Shiba Inu yet.
All right, Laddie, thank you so much for that. So that's it on the program. Thank you so much for being a part of it again. We did it again. We have a final one tomorrow. Laddie will not be here, so it will be you and I. So let's do it again tomorrow. I'm John Mekwa. Have a great day.